Hi everyone, welcome to the second episode of Market Pulse. Oh wait, I should probably put a mic on, shouldn't I? You forgot something. All right, that should be better on the audio. Let me just double check. We're using the right mic. Yeah. All right. I really wish I had more research and a closer look at the markets before I do this live. But you know what? If I don't do these, then I'm gonna never do them again. The conference started about over 2 hours ago, but I'll get there when I get there. You know, I'm supposed to be doing these videos at least once a week, and it's already been over a week. So I'm gonna get the video out, and then I'm gonna go over to a big conf and still have a lot of work to do. I know I have a lot of people to get back to. A lot of people are like hitting me up. The problem with publishing the indicator on TradingView and giving people permission instead of sending them the code, which was kind of dumb, is that now like random people on TradingView are like hitting me. I was like, oh, can I get access to the indicator? And my answer is no. There's a cost to that because with each additional person I allow to use the indicator, it increases my customer support time. And if people think that 0.05 BTC is too expensive, I might end up raising the price because I really don't care for the customer support part of the situation. But anyway, I did want to get these videos out. I'm going to go to screen share and hold on a second here. Where's my screen share? I guess I have to do it this way because I'm going to be showing images as well. Hey, I always forget, so I'm going to try and do it in the beginning of the show, and maybe I'll remember. I have affiliate codes, I have a donation address, but I mean that's that's almost like irrelevant. It's kind of just there because it's there, but I do have affiliate code. So if you're using any of these, you might as well use an affiliate code because it doesn't cost you anything extra. And in some cases, it saves you money. These are the affiliate codes I have below all my videos. So if you are looking to buy a Cryptomatic, oh, I got to remember to wear mine today. Like you get a discount, right? Same thing with Magic Money documentary, you get a discount. And One Broker is what I kind of use sometimes to enter trades. I haven't had much time of traditional markets in Bitcoin. And of course, you all know I use TradingView and I use a Trezor and a Ledger. So these are also just some affiliate codes I have below my video. And BitMax as well. I always forget about that one. I have an affiliate code to BitMax. I was a beta user, beta tester of BitMax. I traded there in the beginning, but the more and more I become a content creator, the less time I have to trade. But I do have an affiliate code for BitMax. I think it saves you money on commissions. I have one of the older affiliate codes, so I'm not even sure how it works. I can't remember the last time I logged in there, but so I'd have to figure out how to do that. I can always contact them, of course. Anyway, all right, let's just get on with it. I do want to I have all of these like I compiled these economic things throughout the week, but then I don't have the time to like do these videos and put it all together. So here's the yields, and the spread is going low. I mentioned in last week's video is that when the 2 versus 10-year spread goes negative, that's what we're talking about. What do you call them? Oh man, an inverted yield curve. Sorry, guys. And that has led to recessions like 8 of the last 8 times this happened in the last like 90 years. So an inverted yield curve is something you don't want to see, and it looks like we're heading close into that direction. Now, it can still take a year or 2 to get there, so that would be fine. Okay, so for now, the markets are positive, but the yields are going lower. The spread is going lower. I'll talk about the yields in a minute. But the stock markets are still doing pretty well, and I'll get to the stock markets as well. And here's another chart. A flattening yield curve on its own has not been a risk to U.S. equities. In the past 40 years, the S&P has typically risen by a median of 6.6% when the curve was flattening from the current level, according to one of the analysts. Okay. Oh, I just got an interesting comment. Ha ha ha. Yeah, so people have to realize that it was all fun and games when I wasn't really enjoying giving out infinite amount of free content. The problem is, as your popularity increases, hundreds and hundreds of people start to ask you questions, and that's customer support. And when you have a lot of customer support, that is, you know, you're not compensated for that customer support. It starts to get annoying real quick. Okay, so people that watch these videos don't really realize that yet, but they will if they start making content. All right, so that's the yield. Let me close this. So I'm gonna stick with yield, and I decided to pull up the yield in TradingView. Like I'm gonna be doing these. Wait, where's my? Here it is. Oh, I forgot even to talk about that. Oh well, I'll get to that later. So I decided to pull up yield in TradingView, and of course I threw the indicator on the yield, and this is the daily chart of the U.S. yield curve. Not the U.S. Sorry, I'm tired. It's been a long day already. This is the daily chart of the 10-year yield, okay? And you can see how right here on July 7th, we topped right on a 9, okay, with a down arrow. It reversed short term. And this is what I always say, right? I guess when I charted it, I wonder if I can make them thinner. Can I make these thinner? Style. Color bars, right scale. No, that's scale. Yeah, I can't really control the thickness of them. That's too bad. I want to make them a little bit thinner because I like putting candles on this. That doesn't look as clean. Pulled it up with candles. I don't know. I didn't like looking at it. I don't know. For some reason, I don't like looking at yields with candles. It just looks weird to me. Maybe it's like my history of looking at them in the past. But anyway, so you can see right here how the yield topped on one of the 9s, and then we went right into a 9 on the other side. This led to a short-term reversal, and then we started to go down. And like I've been saying, like the countdown part that takes you into a 13 countdown is way more critical on Wall Street and for professional indicators. Okay, and we reversed right off of 13, and then we had a pair of 9s, which led to short-term reversals. Now, this first 9 has already given you a 13. The second 9 should give you a 13, hopefully soon to close this out, right? So the yields might actually be topping once again off of these two 9s. So, and this is the reason why I really like this indicator. When I started doing TA in Bitcoin, I didn't have like access to this, and it took me a little while to just, it's time to write the code, which I may or may not be in violation of some trademarks. But anyway, so here's the yield. So I'll be keeping an eye on this a little more. You could trade the yield, but it's not really something that most people trade. You just keep an eye on it for the stock market purposes. All right, I'm gonna save this and close it. All right, now I'm gonna go back to like a little bit more of the long-term stuff. So it looks like there is a major breakout happening. This is a long-term. This is from I don't know, some research of FactSet. Oh wow, I'm familiar with them. And this is a long-term look. This is over a 10-year span. It's like 15-year span. And the Russell is, breaking out the top of the trend line. So again, there go all of the gloom and doomers that are always screaming for a stock market crash. If we break out, this could get, this could get interesting in a hurry, right? We'll see what happens. You assume it's not going to break out. Keep that in mind. you have to assume that it's not going to break this line. But if it breaks the line, then it gets very, very interesting. And the fifth time is where trend lines usually break, right? So if you have 1, 2, 3, 4, I guess if you count them as one, and this is 5. So the fifth try is usually when trend lines break, because that's when trend line becomes obvious. So I always like seeing a break on the fifth try. So let's see if the stock markets really go higher. Don't save. Also on the stock market front, so that's the good. Now here's the bad, right? So between all of the sectors in the S&P 500. And the last time they were this uncorrelated was basically right before the dot-com crash. So that's a little bit interesting. Okay, I'm not sure exactly what to do with it, but hey, FT is reporting this. So that's interesting, something to keep an eye on. You don't get to these levels very often. You almost never go below, 0.2% correlation, but I guess 0.2 ratio correlation, not percent. And so yeah, it's an interesting little dynamic on the S&P 500. All right, let's see what else I got. So here's a good one. December has been statistically the best month for stock markets, okay? And historically, so December is always like the best month for stock market. Also, never has, like in history, never has December been the worst month of a 12-year, of the year, right? So it's so 76%, 74% of the time, the S&P 500, it posts gains 74% of the time. Sorry. So you get gains 74% of the time. So it's a positive month 74% of the time. The average return for the month is 1.6%. But the cool thing is that December has never been the worst month of the year. That's kind of interesting, like ever in history. So that's kind of cool. So yeah, so December should be a nice month for the stock market. Let's not say that. And I guess the last one on the, I guess the economy and equity side of things is, skip that, is Goldman Sachs and somebody else. Let's see here. Goldman Sachs and Barclays, both predicting a very good growth for 2018. So let's see if we can get 4% growth in the economy. So we'll check that out. Keep an eye on that. All right, I'm not going to talk about the Fed chair. I mean, the new one's coming in. Janet Yellen's out. The expectation is looking at 3 to 4 interest rate hikes. Now, most people associate interest rate hikes with the fall of the stock market. That's not necessarily true. It's interest rates. I mean, the Fed doesn't dictate interest rates. The market dictates interest rates, and the Fed just tries to keep up. I used to talk about this stuff all the time, like a year or two ago when I started doing these videos, just not as much anymore. So the Fed just tries to keep up. So the reason why the Fed's going to be raising rates is because the market needs higher rates. And that's not going to drop the stock market because, who cares about a 3% interest rate on a 10-year bond when the stock market is returning, 7-8% a year, right? So it's or more these days. Okay, so this is my monthly chart of the S&P 500. Oh man, I'm not even sure if I can remove those. But it's my monthly chart of the S&P 500. It's been nothing but up. I mean, since the election, absolutely crazy. It's been a very good year, or very good several years now for the S&P 500. But it's been an incredible year for the S&P 500. Just unbelievable. It's just up and up and up. And we're now reaching the second milestone of the Fibonacci extension. I really got to zoom out to like maybe the monthly charts one of these days and throw on some Fibonacci extensions off of the bigger dips. Okay. So again, just like Bitcoin, we're at all-time highs. So all we can do is, try to go to the time indicators. Throw them both on, probably. All right, so let's see what happened here. Okay, so this is the monthly chart. Oh, this is the monthly chart. Oh, wow. Okay, so this is the monthly chart. And let's see, a little cluttered here. Let's take this one off. Okay, better. All right, so I mean, these monthly nines have not led to any pullbacks. And again, this is my version, a little bit different than textbooks. And the prior, oh man, trying to, yeah, see the RSI and the MACD, they're not helpful at all because they're at all-time high. So I'm just gonna, ignore them for now. Just not useful, not useful. So this 13 here is coming from this 9 there, okay, that exhausts this trend. And this 13 is coming from that 9, and this 13 is coming from a prior 9. Okay, so this 13 here is given to us from this one. Okay, and the stock market is just going up because, I mean, the tax bill is looking like it's going to pass. We had a little bit of a panic with the ABC reporter basically reporting incorrectly that Trump was speaking to Russia, or Trump authorized someone to speak to Russia while he was running for president. That report turned out to be false, and the market had quickly rebounded. The real truth is that Trump had, asked his aide or whatever to go talk to Russia after he was already elected. So that makes it fully legal. And that investigative reporter has been suspended, and I believe the SEC is now investigating ABC if someone profited and shorted the market on that news. So that would be interesting if they come up with anything. All right, and so we're going up. So this is fully bullish. I mean, this 13 is a little bit of a worry, but not really, because remember, the moment a green number with a candle with a green number on top of it, goes above a prior candle with a green number on top of it, it becomes a bullish trade. So this is where you can go long, and I see my little green line there from the last time I did this video saying that, hey, it's a long trade. There's some resistance right here with the Fibonacci. This is a monthly chart, of course, so this candle is going to be with us for a while. All right, let's save that. Let's go to the weekly chart. Let's see what's going on. They're going to have to update these. I have a newer version. All right, same thing. We're at all-time highs. We're right at the Fibonacci retracement resistance, or Fibonacci target, I should say. I drew these arrows. Wow, we reached this target fairly quick, didn't we? I drew these arrows, probably drew them last time I was doing the video. They seem to be looking pretty good. Again, it's getting too cluttered. I'm going to drop the back test. All right, so let's see if it's helping us here. So we did have a 913 a couple of weeks ago, and I was looking for a bigger downturn, which never came. It doesn't happen. So that's fine. I mean, if you are a trader and you took profit right here on this 913, that also happened in Bitcoin yesterday, and the correction doesn't really take in, right here is a little green line. So the moment your green candle goes above a prior green candle, boom, you're back in the bullish trade, and you're looking for, 8 more weeks of upside. And now we're on week 5 of 9. So let's see if we can get, and we're going up faster than I expected. So let's see if we can get to another 9 weekly, and that's when you take your profit. You see, it's okay to be wrong here, right? Because remember, when did you enter this trade? Well, very easy. You entered this trade. You had multiple reasons to enter this trade, right? But you entered this trade right here. Well, you don't even see a 1 there, but this green line here, right? Like I have it there for a reason. That's when this trade was entered. This is when this trade was exited. To be cautious. Okay, fine. It didn't fall. When do you enter back in? Well, right somewhere on this week, right? New highs. I mean, like this is how you trade. You minimize your losses, and you just keep going. All right, here's the daily chart. Again, I can't even draw one of my boxes. Can we draw one of my boxes to go higher, because we're just going higher, right? We're not even consolidating anywhere. All right. And this was that candle based on that fake news from ABC about Donald Trump. doing something illegal, which he didn't. And swift rebound when it was found that it wasn't. And a lot of things depend on the tax bill. I don't even know when they're going to vote on that thing, but it's still, but it looks like it's going to pass. Let me throw these on. Hey guys, I'm not actually planning to talk about Bitcoin in this video. I talked about Bitcoin this morning. I don't know what else I can say about it. Oh, wow. And it came on a 9. Jesus. And didn't know that. All right, let's getting cluttered. All right. So again, this is why I like my 9s. Like here's the previous 9, gave us a little pullback. Now I expected a little more, but that's okay. Now we're going higher. You entered these trades back in. And we just had a 9 on Friday that was crashing the market until the report came out that ABC messed up. So, and now we'll see. We're at a top, and you wait. I mean, I don't trade the ones. Like I don't trade this candle, right? Like you exit your trade here, you avoided a panic if you exited early enough, or you exited at the end of the day and kind of set through the panic. And now you wait. You wait for a bullish entry. If it keeps going up, you enter back in. But if it corrects, you have shorting opportunities. All right, let's down with the S&P. All right, gold. This is the weekly gold. Oh, I have to remember what I said last time. This is not looking like maybe we have finally turned and we're going to go up. But for the intermediate term to short term, this is not looking good to me, right? It's still looking like a pullback. It's stuck between these two lines. I'm pretty certain that I said that these lines are a no trade zone for me, right? I would either short below this line, preferably below the moving average as well, or I would go long above that line. So right now, there's absolutely no trade for me to do. And your RSI and MACD are trending downwards, which isn't great. Okay, let's look at the time indicators. All right, again, a little cluttered. Drop the back test. Okay, so we did have a 9 telling us to be cautious going forward. It was already falling at the time. The numbers are still green, but they're going to change. Oh, wow, right there. Boom. Right on cue. Okay, flipping from a price flip to a green 4. So I wouldn't touch it, right? It's the same thing I said about Bitcoin this morning. I drew this line here. The moment we go below the line, it's a short, right? So I'll wait and see. This is a weekly chart, so we'll go to the daily in a second. But on a weekly chart, if this price flips into a red 1, and then the following candle gives you like a red 2 trading below the red 1, it's a short. It's that simple. Where can it rebound? I don't know, maybe back at like 1220, 1200. I'm still not convinced gold is in a bullish trend. I mean, if the stock market continues to go up for 3 more years, maybe my target of a $700 gold ounce will hit. We'll see. Like 700 to 900. I'll be happy with 900. All right, this is gold daily. I keep drawing these cups and handles, and it's just like hanging around, stuck below the 50-day moving average. I mean, I'll wait. A lot of trading is just patience. It is like playing poker. It's just patience. You wait for your perfect hand. You wait for that perfect trade. Like I wouldn't touch this, especially when it's between these moving averages. I mean, I'm looking for that def cross, right? I want it to keep going down. I want to get the def cross. And when it gets to below this moving average, I'm expecting it to fall. Let's go to the last time we had a golden cross. Like here are those crosses, right? Like here's the def cross. You should have preemptively traded this because it was a disaster. And boom, it collapsed. Here's the golden cross, and then it went up, And if we get another def cross, I mean, this is what I would be looking at. Like there's absolutely no reason why gold can't fall. I mean, what do we fall here, right? Let's go peak. Let's just go this side peak, right? 1,300 to 1130, right? So that's almost $200. So there's absolutely no reason why gold can't fall $200. the moment these moving averages cross, because that's what happened last time, right? I mean, again, a lot of trading is pattern recognition, and trying to predict what's going to happen based on probabilities and consistency. And like I said, I'm looking at the last time the daily moving averages crossed, and can it happen again? And it looks like it might happen again. If I go back further, I mean, here's the cross to the upside and how good things were. And let's see that cross to the downside, okay? So here's the cross to the downside. They kind of flip-flopped a little, right? But let's say we take this last cross to the downside. What was the price of gold? $13.20, right? Around the time of the cross. How low did we get? We got all the way to $10.40, right? Like, that was a $300 fall in gold over the next year and a half. Like, nothing says that this can't happen. Nothing, other than gold promoters saying it can't happen. But in reality, it could. So once this daily moving average cross happens, let's see. Let's see. All right. Anything short term? I gotta pull the indicator up. Don't have anything. Let's see. It's gonna be a recent price flip, but it's probably gonna be like a red 3 or something like that. Let's see. Here we got. Oh, red 4 was close. All right. There it is. All right, so we had a bullish 9 buy. Wow, that was kind of cool. Called the bottom here pretty well. And wow, really? We hit 13 and it was flat. That's rare. Oh, I'm sorry. This 13 is coming from this 9. And now we're on a 5. So we have a second 13 count going. Yeah, this isn't looking too good. I'd still wait. I'd wait for the moving average cross or a close below the 200-day, a close below this red line that I had. Let me like extend it a little. Like, yeah. So I'd be looking for a close below this line or a close below the moving average or the moving average cross. But I'm way more bearish on gold right now than I am bullish. Even though the weekly, I mean, I'm bearish to like maybe 1200 and then reevaluate. All right, let's save that. Let's save the previous one. Let's go to oil. Here's weekly oil. And oh, before I do that, back to oil fundamentals. So after 3 years of market oversupply, oil stocks, and that doesn't mean like oil like equity stocks. It means like stockpiles of oil. That was terrible terminology. Oil stockpiles around the world have begun to normalize. Okay, so that's pretty cool. This is one of the reasons why the price of oil has been going down, because everyone was like storing their oil. I don't know, waiting for ice age or something. I don't know, but now the stockpiles are going down and oil prices are starting to tick up. Here's an interesting chart. So hedge funds are very bullish oil. This didn't go very well for the hedge funds the last time they were this bullish on oil. Okay, so that didn't go very well, right? So now they're even more bullish on oil, and let's see what happens, right? So what I don't want to see is, since they're doing it for me in here, I don't want to see this double top. Like, I really don't. It's almost there already. I don't want to see this double top. So either we got to turn like right now, or you get everyone suckered in. So where do you get everyone suckered in? The most likely place to sucker everybody in is right here, okay? Because that was the prior support, which then was the middle of the big breakdown. And now this is very serious resistance. And if oil can rally into this, $75, $78 zone, that could be it. And then we go into, new lows. So let's see what happens there. not going to save the chart. All right, now let's go back to the chart of oil. So here's oil. We're only at 58. So for oil to go from 58 to 78, that's going to be a big move, okay? Your RSI is doing well. It just reached overbought. I mean, this looks bearish to me right here, right? Because you're bouncing up against the moving average. Your RSI has just gone overbought in years. And your MACD, if your MACD crosses to the downside, you know, it was higher here, right? So that's a bit of that MACD divergence, even though RSI is not diverging. But RSI did hit overbought, okay? I've been bullish oil ever since we broke this little yellow line. And now that we hit the 200-day moving average, I mean, this was the bullish trade, right? I mean, this trade hit its target perfectly. I'm actually going to remove that, okay? And let's see if there's any, definitely profit taking is a must, but let's see if there's a chance to go against the hedge funds here to maybe take on a short trade. Now, there was a weekly 9, and then we went higher. So again, according to the indicator, you had a bullish entry the moment your green 2 started trading above the green 1. And now we're pulling back a little bit. Now this trade is still kind of profitable. Guys, this is a video about Bitcoin. I did that this morning. I'm looking a little bit at the live chat. Maybe I'll mention it at the end, but I do have to get to the conference as well. And these numbers are going to flip. I mean, it can't go down forever. So if the price flip comes, let's just say this is a rough bullish trade right here. If I wasn't this bullish trade, I'd probably take my profit, and I can always get back in the moment it starts trading higher than these candles. Okay, but I'm gonna take this 9 weekly seriously, the 200-day moving average seriously, the fact that hedge funds are overexposed. Most hedge funds lose money, by the way. Don't get into this idea that the rich always get richer. And let's see what happens. Daily oil, let's see if we can time it a little bit better. Again, not much, right? You're in this, your MACD has crossed to the downside. So not really much is going on. A little bearish here, still above the prior high, but right at it. Probably a little wrong color to use. Let's use yellow. And bouncing off of it a little, but I don't know. Let's see if there's anything else we can point to here. The daily chart looks like it's kind of useless right now. Almost at a 13, coming from this 9 here to exhaust the bullish trend. So not much. Like, again, like I said, price flipping, daily chart is giving you absolutely nothing. The euro, I haven't looked at the euro in a while. This is looks like the weekly chart of the euro. And I think I'm all out of fundamental. Yeah, I am. So it is a lower high, which is good. Your RSI and MACD are lower, which is confirmation of the lower high. Let's see if this lower high stands. If this lower high stands and we make a lower low, could be pretty bad for the euro, but the golden cross is coming, which I didn't want to see. Like this giant red arrow is here for a reason. I thought euro would be, you know, collapsing by now. Oh, now I remember where I was going to pull up. We'll get to that in a second. Get the USD after. Oh, it's in the other one. All right, that's fine. All right. So what was I going? Oh, yeah, indicators. The yen, I don't have any yen charts. I got to pull some yen charts together. I'll try and do it for next time. Yeah, see, the reason why I put this giant red arrow is because I thought this 9 would be more significant. Kind of wasn't. And yeah, it's kind of like oil, you know, it's middle of nowhere. I wouldn't touch the euro right now, one way or another. Now, if we go above this blue line, that automatically got put there by the code, but I would have drawn my line around that area anyway. If we go above this line, then yeah, euro's bullish again, and the dollar is bearish. All right, how do I get rid of these things? There we go. So as I stay with the euro, I mean, this is the US dollar. Let's stay with the euro, right? So let me see here. Hold on. Oh, this is my own video. I don't need that. But if I close it, I'm going to dox my email address. So that's not really going to work. Can I close tab? Close tab. Perfect. No, I'm doxing chat. All right. Nope, not looking at Bitcoin. Where was I going? Oh, I was going to, where did it go? Oh, here it is. So 114 Italian banks, roughly 23%, have NPL exceeding tangible capital. So the Italian banks aren't looking too good. Let's put it that way. Once again, I have no idea how Italian banks continue to avoid the Greek disaster year after year after year. But sooner or later, the Italian banks are gonna, whoa, what happened there? Tell me I lost internet. Man, I used to read Mish all the time. Really good blog, but just no time lately. Anyway, so keeping an eye on the Italian banks. It's not looking good, and that's why I wanted to pull up. Let me see here. The Italian index, the FTSE MIB index, which is like the Italian stock index. Okay, and I'm not going to zoom out too far, but this is the daily, right? But the reason why I liked it is when I pulled it up, once again, hey, people can make fun of me all they want for the indicators that I use that they've never heard of because no one taught it to them, right? Let's TI backtest, drop it. All right, so just in the last couple of weeks, I guess, here's that dreaded 913 on the same day that's happening in Bitcoin right now or yesterday, right? And it led to just a complete drop in the Italian index, and it bottomed right off of the 9 on the flip side. And now we're working on this countdown to 13 to the downside, okay? We're now under the moving average. You have some support. And yeah, I'm sure Wall Street is looking for more downside here because you have this little bounce off of the oversold condition. And now we're once the 50-day moving average turns, it would start to go down, okay? And I mean, the 9 here wasn't perfect, went a little bit higher. The 9 here was pretty good. So yeah, so I like it. I like using the indicator. All right, so that's for the Italian banks. This I can close, or the Italian stocks in general. Here's the USD. Oh, I got these arrows right. I can't remember the last time I looked at the USD. Looks like USD is going up. Not really much else to say. Let's throw these guys on. And let's drop the back test. The other one's calculating, just to see if we see anything here. Probably won't. Come on, calculate. There we go. Yeah, there's nothing here. Again, the moment color flips, you just wait. Just see what happens next. Don't trade the color flip. All right, so that's pretty much it for that. I'm gonna take a glance at the chat. Maybe I'll take some Q&A on traditional markets. I mean, I can glance at Bitcoin, not really. Oh, since I just opened this. Again, guys, hey, use the affiliate codes. There's no reason why the company should keep all of the money if they're willing to give you a discount and me a kickback, right? So that's what affiliate codes are. I don't do multi-level marketing ever, so none of these have anything to do with multi-level marketing, and it's in my video description. So check that out. BitMax is there as well. I should probably add it to the chart here. All right, where was I going? Here. All right, talked about Bitcoin this morning. There's nothing to add, right? I mean, I have a weekly 9 looking for 1 to 4 week pullback. Let's see if we get it. We certainly got it the last time. The daily chart is what worried me yesterday when I did the video. We were up here, and I was telling people, hey, day's not over yet. Day is not over yet. And then the next thing you know, we fall like $1,300. And we're working on a bullish candle today, slowly. So let's see. But right now, if as a trader, you're sitting in cash and you're waiting. Any sign of weakness, you short. Any sign of strength, you go long. Do I recommend shorting Bitcoin? No. Do I recommend selling all of it for cash? No. I'm holding all my Bitcoin. 4-hour chart, nothing going on. Color flip, useless. 1-hour chart this morning, I expected us to go lower than bounce. We started going lower. We came halfway to my target, and then we bounced. So let's see if we do it again. So like nothing's changed, right? The only thing that's changed is time. So, I mean, all I'm going to do is I'm just going to slide these over, because nothing has changed. That's my zone, right? So I have no reason to be bullish here until I see new highs. Like at the least, I want to go above this line. All right. That's it for me. What happens if the yield curve inverts? Probably another recession. An inverted yield curve is the best sign of an upcoming recession. Go to screen. Stop screen share. Dow Jones Industrials. It's almost like the S&P. I haven't looked at my Dow Jones charts in a while. Maybe for next time. I got to be more consistent with these. IOTA's a scam. I'm not going to get into it on this podcast, but good luck. I mean, if you're holding it, enjoy. Hope you get out on top. Oh, CBOE futures trading. I got to do a podcast about the futures. I'm not going to get into it now. I talked about the CME futures like weeks ago. Maybe I'll find those YouTube videos and I'll find the timestamps where I talked about the futures a lot, and I'll throw those in my Twitter. So watch on Twitter. I'm going to look for the videos where I talked about the the COE futures or the CME futures. There is no COE. There is the CBOE and the CME, right? So the CME futures are coming out. All right, I'm gonna call it a day, guys. I want to go to the conference and stuff. I'm already super late. I think my speaking slot's tomorrow. But if you guys, if you're at the conference, you're not watching me. But I'll be in Toronto. Oh, do I have those here? Yeah. So this is the conference where I'm speaking at. I'll be in Toronto. I have a discount code in my video. Not this video. I think this morning's video. So here's the discount code speaker. So you can use that if you're going to attend the conference. Now, my seminar is on the 9th, but that seminar is sold out. I know people are emailing me, want to get into the seminar, but sorry, guys, it's actually sold out. Trading seminars. There will be one in Singapore. I really got to get on that in January. And yeah, so that's pretty much there. And of course, the reason why I'm going to do a seminar in January is because I'm speaking on a cruise from Singapore to Phuket and then back. All right, and that's it. All right. On this note, I'm going to call it a day, and I'll try and get the video about the future soon, hopefully with a guest that can give me a little pushback on why they're bad, because I kind of think they're pretty good. All right. All right. Bye, guys. Good luck. Oh, wait. I wasn't even sharing screen when I was doing that. Oh, man. All right. I always mess that up. All right. I'll go through it quick. My seminars, I'm going to do the Singapore one. Need to get the dates straight. Conference I'm speaking at, upcoming conference in Canada. discount. And the following day, I'm teaching my own seminar, which is sold out. Sorry about that. If someone cancels of the 20 people that have signed up, I'll let you guys know. And that's the cruise, which is why I'm going to do a trading seminar in Singapore. And that's it for me. All right, guys. Tone signing off. Talk to you all later.